Hi guys, welcome back to the channel, welcome back to the new video today. Today we're doing Bitcoin, and right now we're gonna try to find out where the bottom is, because I've seen a lot of channels talking about like we're going to 22, 24, 30,000. Like, I'm here to tell you like that's probably not gonna happen. Like, it can happen, but probability is just not quite there yet. So we're gonna because we need to figure out if this is the real correction, the big kahuna, the big mama, you know. How far down are we gonna go? So we're gonna play a little game today. These are moving averages from 2 to 800, and we're gonna play the elimination game. So we're gonna go one by one moving average and see which fits and which fits not our theory, and see where the bottom actually might be. So I believe there's a important aspect, psychological aspect on the chart that has to happen before we can actually move higher, and I'm gonna tell you what that is a little bit later on when we get to that part. So first of all, basically thank you for clicking the video, and like the video if you like the content, and subscribe if you want to subscribe, because at 500 we get 500 sub special, and I'm thinking I'm gonna do a short live stream where you guys can ask me anything if you want to. So that's gonna be special at 500. Okay, let's go. So basically what we're gonna do here is not draw on the chart. We're gonna eliminate these moving averages. So this is 20, 50, 100, 200, 400 and 800 moving average, and we're gonna see which one fits and which one doesn't fit, and try to figure out where the bottom is for Bitcoin. Now the first thing you can see here is on the 20 moving average, it's broken. Here, when the price went down, it hit the 20 moving average. It held it once, two, three times and bounced above the 20 moving average. Unfortunately, now it closed below it. It tried to break it the second day. It couldn't. Third day, it got rejected. So basically, the 20 moving average is out of the play. It's gone. So we have to remove the 20 moving average, because that's not the bottom. Obviously, we have not hit it, so we have to go further down. So we're gonna wait with these here, and we're gonna eliminate the most obvious ones, the 800 and 400. And how are we gonna do that? Well, we're gonna zoom out, and we're gonna go back in time to the 2016-17 bull run. And you can see here the green one, it actually has no effect on the price. It's so far away from it, and also the 400 moving average, it's just so far away from the price that I don't think we ever gonna hit these levels again, unless of course something like Corona wave 2 happens and the markets drop really hard like over here. So 8,400 not happening, and 10,000 not gonna happen. So if you bought below 10,000, congratulations, because that price is never happening ever again. Okay, so we can remove the 800 and the 200, now 400 moving average. So now comes the question, like, of these three, which is the most likely to be hit and be our support that we need. By the way, take in account that this is on the daily, and we're gonna run the daily for this video. So let's take the 200, because it still can happen, like 11,900, 12,000. Depends on a couple of days. 12,000. If it can go here, it can wick down to the 12,000, right? Let's see what happened before. And here you can see clearly that only time it hit the 200 moving average is on the wick over here. This wick over here, and after that it never actually hit it. So chances for us, and this hit over here was actually on the wick on the one day. It just went down real hard, hit it, and just bounced back up. That's it. So chances for us to hitting even the 200 moving average on the daily at price 12,000 is really, there's a chance, but it's so small chance that, and all the bullishness we have in the market right now, there's like I wouldn't put my bets down. I mean, it would be nice if I put bets down there and they got filled, but you know, it's really small chance for that for it to get filled. So we're gonna remove the 200 moving average, and now we have come down to the 50 and the 200 moving average, and we have to figure out which of these two are most likely to be hit and be the support we need to move higher up. Now here comes the interesting part, the psychological effect that has to happen for us to move higher up. We have to wait. Sorry about that. We have to make weekends sell. Okay, dropping down to 16, it might work for really weekends, but still a lot of people have too much faith in the market and they are not selling. Weekends must sell for the price to move higher. Weekends must get out of the market. The traders that know what they are doing, they have to take the money of the weekends, put in the hands of the strong hands, and then the markets can move higher. Until that happens, the markets won't move higher. So this correction down here it was a scare. But we just got back up again. So I think we have to go below this level over here. I think we have to go below the level to scare the market, to scare everybody, like your mom and pop that's just started buying at 20,000-90,000. Like if they bought at around 90,000 and the price goes below 16, 15, they lost like 25% of their money. They're scared. They won't get out. They're like, oh, I cannot handle this. They want to get out. So I think we have to get on psychological level dump below the previous 16,000, even lower than that, and make the weekend sell. So the first thought is like 50 moving average cannot hold because we have to go lower, and lower is 100 moving average. But let's look at what has happened before and what has happened so far in this bull run. In this bull run, you can see here that the 100 moving average held over here, and also here when we were going down, the 100 did hold over here, and we went up. So just seeing so far the early days of this bull run, the 100 is actually holding the price, and we can also expect that this fall can fall down to the 13,500 if it dropped today. Of course, after a few days it's going to be 14,000, something like that. So we can expect the fall all the way down to the blue line, to 100 moving average. Just looking here, but let's go even further back and let's see what's happened in previous bull runs. And you can see here, and I'm going to show you that the price actually respected 50 moving average more than the 100 moving average. You can see it here when the price, this is all the very start of bull run, went down, respected the 50 moving average, and then it broke the moving average down to 100, got back above the 50 moving average, held the 50, up 50, 50, 50. It's only when it breaks 50 that we get down to the 100 moving average. Then we get above 50 again, and we follow the 50, not 100. We follow the 50, go up there. It's only when it's break the 50 that we get back to the 100, get on top of the 50, move with the 50, and hold the 50, and so forth, so forth. So 50 moving average is some kind of support, but we always get these dips down to the 100, and these dips down to the 100 expect all the way here at the top of the bull market, where we actually couldn't push the price even down to the 100 moving average. That means that some kind of a top is actually happening. So there's a first sign for you when we are going to reach top in this bull market, when the price cannot even go down to the 100 moving average. So these things is just what I was telling you about. The pulls back down to the 100 moving average, they are really important and they need to happen. And this one over here, this one over here, right, and even these over here. So these moves down to the 100 are those that I'm saying have really psychological effect on the market, because weekends thinking that its price is dropping, weekends are thinking we are going down to zero, weekends are thinking Bitcoin got hacked and it's gonna lose all the value. Weekends cannot handle these kind of drops, and that's why these drops are really nice, and they happen and they scare everybody, and they happen on the wicks This one didn't happen. This was the early bull market, but later in bull market they happen on the wicks really hard. Doesn't last a very long time. It just picks up all the stop losses, pick up all the weak hands, and the market starts moving again upstairs. Now I'm gonna show you the effect on the effect this psychological effect has on the market. This was the corona dump. This was the bottom for the market. The way I see it, and the way every chart is explaining, this should actually have been the start of the bull market. Instead, we started it over here, but this was actually start of the bull market, and then the corona came and then just liquidated everybody. At least it looked like it was start of the bull market. The thing is, everybody, absolutely everybody that had stop losses over here and all the weekends and everybody sold into the corona dump. Everybody sold, and once everybody sold, there was no more sellers, and what happens then? The price has naturally have to go and move upstairs, and that's gonna happen over here now as well. We have a lot of people that bought at 90,500. We have a lot of people that bought even lower, and they want to take profits, close their profits, right? We have a lot of traders that are out of markets and are shorting it, pushing it down. A lot of it's happening, but thing is, we have to scare the market, scare the weekends, and for that to happen, the first thing you can expect now is the price to go down to what's this 16,500. That's the first target, and it might seem that it's actually gonna hold the line, so it can hold the 50 moving average, but in the long run, I think we are gonna drop down hard down to the 100 moving average, wherever it's gonna be around 14,000. And first then, when we scare the market, scare the weekends, we're gonna continue further up. So that's what I'm gonna think. So the conclusion here is the 50 is gonna hold for a while, but not for that long, and the 100 is actually a line we actually want to buy back in at. So for people who are buying like long-term hodlers and stuff like that, dollar cost average, everything around 50 moving average, I think it's probably fine. But for those who want to get the exact bottom, I think 100 is gonna be the exact bottom. And there you go. That's a resonance or whatever it's called on where the target is. So target is around somewhere around here, because this is not gonna happen right now. First we're gonna hit the 50 moving average, probably play around with that. Not gonna sure what's gonna happen, but around 15,000 right here, that might actually be our target. Let's just look at if we have some this one over here. Yeah, this is nice. That's 13,800, 13,800, something like this. Around 14,000, around 14,000. I think the bottom is gonna be. I think a lot of people are gonna be scared, since from 19,500 down to the how big a drop is that? 30% drop. That's what we want. 30% drop, and that's the big kahuna, the big mama, the big whale. You're gonna drop, and all the weekends are gonna actually start selling, and we can go up. So there you go. That's my target. Not 22,000, not 24, not 30,000, whatever everybody's calling. Yeah, that's gonna happen, but the time frame when they are calling it and what's gonna happen first, I think first we're gonna go back and then we're gonna go up. Now, thanks for watching, and again, thanks for supporting channel. The best way you can support channel is click the like button, subscribe to the channel. At 500 we get a live stream. Ask me anything. You can put up your question, ask me anything about trading. Then, yeah, stuffs are coming. Thanks for watching. Tomorrow a new video. Not quite sure what's gonna be about. Today was Bitcoin. Take care.